Let's check the markets. Got a good thing going today. We're green across the board. Nasdaq's up 1.5%. Man, the Russell is up 9% year to date. Small caps have been playing ball big time. S&P now wipes out all the losses since the war began. Nasdaq's coming off its 9th straight positive session, or 10. We're going 10 now, longest since December of 23. The S&P is less than 1% from new highs. Can't believe you're saying that, Joe, after what we've been through recently, but the tide has turned.
It has. And we are rebuilding the growth trade. That is what is going on in the moment, has been going on for the month of April. Today, you have S&P growth up 1.7%. S&P value is up 15 basis points. For the month of April, you have S&P growth up about 9.5%. You have S&P value up 2.5%. I understand, I respect the narrative coming into the year that we were going to get a broadening out, that the S&P equal weight was going to take charge. In fact, that did happen. But right now in front of us, why you have to gain confidence is you needed to see the rebuild of the growth trade to restore the risk on sentiment. It's not just growth itself. It's internally, it's gold, it's silver, it's biotech, which is at its highest level in the last 5 years. The momentum factor is up 11% month to date. Semis are up 16% month to date. Even some of the private equity publicly traded names like Blackstone, like Evercore, like KKR, they are up double digits month to date. This is the formula that you needed, growth to make its return.
So, Brian, the tide's turned, sentiment's turned, right? Citi upgrades U.S. equities to overweight. Morgan Stanley's Mike Wilson, he was with me the other day on Closing Bell. He was on Squawk this morning, in which he said the lows are in for the year. The technicals are now your friend again. Wolf talking about that. Weekly trend work turning bullish for the S&P. Tony Pasquarello, Goldman Sachs, head of hedge fund client coverage, says, I spent much of the past 6 weeks trying to work out why the S&P was so resilient. In that search, a few things came up again and again. One, the market never lost confidence in the underlying durability of the economy. In turn, earnings expectations trended higher. That's the story. That's why people tried to look through the war and look through the spike in oil, because they believed that the economy and earnings were going to remain resilient. And that's why, as we said, you're about 1%. You're less than 1%. Now you're like 2/3 of 1% on the S&P, away from a new all-time high.
Yeah, I think the earnings and the fundamental situation help people stay in the market. Now they're going to get paid for staying in the market and paid for that earnings and macro backdrop. And I do think the momentum, obviously, when you have the snack back plays on some of these stocks that are up double digits that were down a lot, Scott. But I still think that you're going to see, look at how small caps have done. Look at how value's done. I think from a longer term perspective into 2027, we are still going to see better areas work. It's not just going to be all about tech, but we'll take it where it is. We like the tech stocks when they go up. We're fully invested in tech and communication services, and so we've enjoyed this rally.
All right. From Jimmy Jitters to Jimmy Jubilant, because his tide has, in fact, turned as well, hasn't it, Mr. Leventhal, the good farmer on our desk today?
I think sometimes you need to listen to the markets. I mean, I can sit here and I can rationalize, the four of us can rationalize, and with Josh 5, where oil prices are, what's going on with the Strait of Hormuz, consumer sentiment. We can put all these things together, but sometimes the market just tells you what to do. And you've referred to it twice already, Scott. We're within a hair's breadth of an all-time high on the S&P 500. You've got a lot of stocks that under the current events conditions should be doing terribly. Look at the airlines and how well they're doing. Look at a lot of consumer discretionary stocks doing well. Look at a lot of financial stocks, not all of them, but look at a lot of financial stocks that are shrugging off the worries about private credit.
Why did you get so worked up negative? You were worried. You said as much sitting in Belsky's chair last week.
Well, I think about that, and, where was the locus of that? It was when I sold On Holdings. And that also had that management change and the terrible price action. And I think, just to stay consistent, Scott, that I was listening to the market on Holdings at that exact moment. I mean, that slide, just on a seemingly fairly innocuous management change, told me something might be afoot that I wasn't paying attention to.
Literally
I actually didn't mean that. And
You thought that On Holdings was giving you a broader market signal, Jimmy?
Well, I added to it with Nike, which had reported earnings. There were some rumblings, but look, my tone has changed. I'm listening to what the market is telling us. Yesterday, and I said this, when the market rallies on what was bad news, that's telling you to get in. And if we set a new high today, tomorrow, whenever, I think people are going to now pay more attention and get more into the markets. They're just going to have to get invested. Right. So I'm not playing around. I'm in.
Can he play on his Farmer Jim thing a little bit, though? I mean, when I think about you and you think about the Farmer Jim and you think about how your affinity and longer term outlook for the industrial stocks. Yeah. And you love industrial stocks, and you've owned industrial stocks for a long time. Did the shakeout or potential shakeout with respect to macro and the cyclicality of these areas, did that kind of worry you and cause some of your concern?
Let me push back on the Jimmy jitters. It's fun, and I like it, and it's cute and everything. But let's face it.
And it's legit, but go ahead.
But look, I mean, what do I hold, and what have I been adding to? Like the Wynn Holdings, the Disneys, like holding a Delta Airlines. If I was really worried about the macro, to your question, I'm not holding Delta no matter how good its balance sheet is. And by the way, the earnings report from Delta last week kind of said, maybe you shouldn't be so worried, Jimmy. So look, I listened. You're right. I was a little worried. I said that. I'm not anymore.
Okay. Josh Brown has his NHL playoff beard coming in just at the right time. About to go to the postseason. And this market is ready to figure out where this puck is going to. And it seems like people think it's going into the right place.
Yeah. Before I get to that, I have to tell you, one of my favorite things about being on this show for as long as I have is getting to watch this character turn, this evolution in Jimmy Lebenthal. When I first met him, he was this dyed-in-the-wool value investor. The market is wrong, the stock is cheap, and now I'm hearing all the right things. I'm hearing, listen to what the market is telling me, watch what the market is saying, and I absolutely love it. It's like I met him as young Anakin, and he is full-on Darth Vader, and I'm just so thrilled that we got him there. Jimmy, welcome to my world.
Josh.
Listen, Joe said the most important thing, that momentum as a factor, like relative to, let's say, low volatility or dividend growth or book to market or whatever. This is a momentum market. This is my market, hence the playoff beard. I'm having a lot of fun this year. And I'm just like looking at some of the best stocks, just the ones that I've trotted out in the last few months. Sienna plus 128% since December 1st. It's insane. Lam Research, Newmont. Think about the names we talked about. I put Intel up on January 26th, up 40% since then. Valero, Exxon. It's just the list is endless. And what's so cool about this market is all of those names defy the sort of traditional characterization. People, is it growth or is it value? Is it cyclical or is it defense? It doesn't make a difference. The buyers are overwhelming the sellers in these charts. So when you say take what the market's giving you or listen to what the market said, the market is telling you that there are so many ways to win. None of those companies I mentioned are in the same sectors or in the same industry groups. And you've got winners all over the tape. And so that's what the message of the market has been. And by the way, the street is now looking for 17.9% earnings growth in 2026. That number is up 3 full percentage points since January 1st. We have relearned this year that we are significantly less sensitive to oil prices in the S&P earnings than we were in the 70s and 80s. And as the mood lifts here, people are out hunting for new opportunities, and they're finding them in a lot of the best stocks in the market. They're pushing on winners. So it's nice to get the snapback in IGV names. We get one once a week. I don't know if anyone's paying attention. It fades pretty quickly. So if you're in those names and you've been wanting to sell, this is your chance.
Yeah.